Okay, we still have 12 minutes, so I'm going to cover the last few slides. Okay, so desirable characteristics of the accounting information, right? So you think about information. So what are the good characteristics we are looking for, right? The investors are looking for, the bankers are looking for. Well, they need the information to make decision, right? So the investors will want to relevant information, right? They want the information that are relevant to the decisions. And they also want reliable information, right? The suppliers could exaggerate the information, right? The investor will hope that the information provided by the supplier should be reliable, right? If it's relevant but not reliable, right? How useful that will be, okay? However, you cannot get both at the same time. Relevancy, reliability is a trade-off. You cannot get both at the same time. Why? I'm going to show you using one example. Okay? So suppose, okay, you purchased land in Vancouver in 2004. You paid $1 million for the land. And now is 2019, December 31st. Land is praised as $10 million. Okay? And now, okay, I have this company. I have to supply this information to the investor, my company, owning this land. Should I report 1 million or should I report 10 million? Anyone? So at the end of December 31st, the appraisal of the land was 10 million. You purchased it in 2004 for 1 million, right? Okay, there are two numbers. At the end of December 31st, you're going to report your financial report for this land. Are you going to report it at 1 million or 10 million?
10 million.
Maybe 1 million?
1 million times, yeah, you can see, right away. But you can't report both, right?
Yeah. I'd say 10 million and then show documentation of like why it should be worth 10 million.
Okay, yeah. Yeah, you have good reasons, right? I'm sure you have good reasons for 1 million or 10 million, right? But you cannot report both, okay?
I think 10 million.
Million, okay.
Depends. For taxes, I'd report 1 million.
1 million, yeah, you can see, right? So both numbers are useful, right? Both numbers are useful in different ways, okay? Which number is more reliable? Can anyone tell me which number is more reliable? I'm talking about reliability. Which number is more reliable?
1 million.
1 million.
Yeah,
1
$1
million.
million. Yes,
Yeah.
$1 million, right? Because
Yes.
that's what you paid. If you don't believe me, I'm going to show you the invoice, right? There's a record in the real estate institution, right? That's reliable. The $10 million is appraised, right? It's appraised by one person. A second appraiser may appraise it at a different value. So when you compare the two numbers, the $10 million is less reliable than $1 million, okay? And you tell me which one is more relevant.
10 million?
10 million is more relevant.
10 million.
Yeah, exactly. 10 million is more relevant, right? Because we are talking about December 31st, 2019, right? And the current value, the current market value, is more relevant, right? Because if I want to sell it, that number is more close to the number what I'm going to get. Even though it's not reliable, the 10 million, but it's going to more close to my decision, right? So it's relevant to my decision. The $1 million is not relevant to my decision. It's less relevant to my decision. My decision is, should I sell the land? Okay. So when I think about selling land, I'm thinking about, should I sell it? How much money I can get, right? So then the $10 million is more relevant because it's most the current value, the market value, not a history value, right? But it's less reliable, right? When I really sell it, Maybe I can sell more than 10 million. Maybe I can sell it less under 10 million. Right? So you can see this is the trade-off. Should I report 1 million for the reliability, or should I report 10 million for the relevancy? Okay, so relevancy, reliability are trade-off. You can't get both at the same time. So if you go with the 1 million, it's cost, historical cost. So your reporting base is historical cost. If you go with 10 million, that's called fair value accounting. Fair value is market value, okay? So you can see now, okay, the accounting standard has to decide, should we go with fair value accounting or historical cost accounting? Okay?
So are you saying there are no rights or wrongs of
The
saying?
accounting standard will tell you, the gap
Oh.
will, yes, but the gap will tell you what we should do in this scenario.
Okay.
Okay, does that make sense?
Yeah.
Okay, so once we learning in the chapter 10, the property, plant, equipment, then we're going to learn about, okay, should we report it in 1 million or 10 million? What does IFRS tells us? What does ISB tells us, right? So we need that guidance.
Can I give a good example of that?
Please, yeah.
Yeah, so I bought my house in Lethbridge, and it was an infill, meaning it was brand new, built in an old area, and I live right near Henderson Lake. So when the city tax adjusters came to look at my house, they evaluated it for about 100,000 more than I had paid, which is great if I'm going to sell it and I want to go to the bank and go, hey, look how much my house is worth. But when I have to pay taxes every year on this house and it's 100,000 more,
yeah.
I was like, all right, I'll cut you guys. If you guys cut me a check for 50 grand, like we'll meet in the middle, like it's yours tomorrow, right? They wouldn't do that. So they quickly lowered the value of my house overnight. And all of a sudden my taxes got lowered. So it was just like it was kind of really exactly like that, right? Like, well, because I want to stay in the house long term, there's no real value in me overvaluing my house to pay an extra $1,000 in taxes every year, right?
Yeah.
So
good job, Josh. So you negotiate with the government, so you reduce your bill, right?
yeah, exactly.
Good job. Yeah, I did the same thing. I purchased the house for a price that is substantially lower than the assessed value. And so I talked to them. I said, well, if you are based on market value, this is the market value. I just bought the house, right? This house, the value I paid, the price is the market price. You're gonna go with this number. And the lady said, no, it's based on last year because there's a 1 year lag. So
Yeah.
next year, the year following, I paid less bills. So yeah, learn accounting has a lot of benefits.
Yeah, absolutely.
Thank you for sharing, Josh. Appreciate that.
My pleasure.
Okay, so we still have 4 minutes, okay? I'm gonna quickly talk about earnings management. Okay, so basically there are different accounting standards, but one size does not fit all. So it's not like if you have a perfect one standard will meet everyone's needs, right? That's why we have a different accounting standard, IFRS, ISB, right? And then they have different choices. The managers basically have different choices, right? You learn in the inventory, right? Remember when we learned about the inventory, you have different ways measuring the inventory cost, right? The moving average, the FIFO, what else? That's the two main ones, right? The FIFO and moving average. And then for the account receivables, right? You have to consider about the bad debt, right? Bad debt expenses, and you have to make the estimate. That be 3% of your account receivable goes to your bad debt, or 4%, right? This is based on management estimate. So then that leaves room for the earnings management. If the manager wants to report less earnings, the manager will exaggerate expenses. So the manager will go 5% of bad debt, right? if they want to exaggerate expenses, reduce income, so they can pay less tax. If they want to be attractive to investors, they want to exaggerate earnings. So then they are going to reduce expenses. They're going to go with 1% bad debt, right? So you can see managers could manipulate things, their choices, their policies, to affect expenses, to affect earnings, right? To achieve their goals. That's what we call earnings management. So basically, I will give you some examples. So if you want to go public so that you get more, your share price will be higher in the market. You have to show strong earnings, right? If you want to show strong earnings, the managers will want to manipulate, to try everything to make their earnings look good, right? Right? Increase the revenue, decrease the expenses. So there are other reasons the managers wants to reduce earnings. For example, a new CEO will take something called a big bath, right? So the new CEO is gonna have a very poor year and blame on the previous CEO. Okay, so the CEO is gonna run all the expenses on the year of their succession. Okay, and that year the earnings will be very bad, right? Because you ran through all the expenses just on that year. So your earnings will be low, and the CEO will be like, guess what? The previous CEO did it. It's not my job, right? But then in the future years, they are going to yield higher earnings because the expenses that was probably for future years has been run through in the current year, right? So they have less expenses to run for the future years, and that would help their earnings in the future years, and that's the base how they were compensated, right? So in that case, we call it big bath, right? The new CEO is gonna run through, take a big bath on the expenses, and then blame on the poor performance on the previous CEO. So you can see that there are different reasons, motivations for managers to either manipulate earnings up or manipulate it down. Okay, it does happen. Okay, so it's time. So before we go, do you have any questions? Time is up.
Yeah, I just want to ask you. Okay, Alan can ask.
Yeah, go ahead.
Yeah, I want to ask a question that will it be possible for you to also send us the chapter 2 of the textbook, just in case some of us have not gotten our textbook?
So you are saying send the textbook?
No, what I mean is that you sent us the copy of the chapter 1 of the textbook.
Yeah.
So I'm looking if some of us have not gotten our textbook by the next lecture. Are you going to send us the chapter 2?
So this is about the copyright issues. I'm only allowed to share a maximum of 10%. The more I do it, I'm against the copyright. So that's why I can only help you so much. If I share with you chapter 2 and chapter 3, that means I'm giving out 30% of the content. So that would be against their copyright, because I don't own the copyright. So I don't have the power, the authority to share that information with others, with students. Does that make sense?
Yeah, it makes sense.
The first chapter is fine because I think I can share under 10%. That's fine. Okay, but cannot be over 10%. It's a copyright issue.
Yeah, thank you.
Yeah, so I posted the course outline on September 2nd. I was hoping that you guys will check on time. You can order it ahead of time. But you still have 1 week to order it, especially ebook, right? If you order an ebook, you have access to it right away.
Yeah, I ordered the paper copy, and just today they just told me that my order has been processed. I've done that since Monday.
Okay.
Yeah, I was just told today that it has been processed, so I don't know when to get it.
Okay.
I'm sorry,
I can't give out the content, right? So because suppose that if I copy every chapter, then you don't even have to buy the textbook, right?
Yeah.
So there's a copyright issue. Yeah.
Okay.
Um,
Thank you, Sheldon.
No problem.
yeah, will you be posting the PowerPoints for the next sessions though? Because I'm in the same boat. I've ordered for the book already.
Yeah.
So that it comes, I think, with a connect code. Yeah.
Okay.
But it hasn't arrived also. But if your PowerPoint will be in Moodle, I think it will just be fine.
Yeah. So I will post my PowerPoints. Yeah. I will post that.
Okay, thank you.
No problem.
I have a question regarding My Labs.
Yes.
So I saw the deadline of My Labs registration in the course outline, which I believe on like September 11th, like tomorrow. But like, what happens if you miss the deadline? Because again, like I haven't received my textbook and online access school yet.
Okay. So I will extend that deadline. Thank you for telling me about that. I will extend the deadline. Yeah.
Okay. Thank you so much.
Yeah. No problem. Okay. So if you don't have any other questions, we are done tonight. As you can see, this is kind of a long class, right? So I hope you know I will try to make it a lecture as fun as possible to keep you engaged, but it's still a very challenging situation. So make sure you know you try to focus so you can learn something from the lecture.
If I may, if you get the temporary access in MyLab, I think they let you access an ebook version of the textbook.
Yes,
Yeah,
that's right. If you buy the
for free.
Yeah.
for free for like 14 days.
Okay, good. Thank you for the information. Yeah, appreciate that. So don't forget to send me an email about your participation when I was asking questions, if you answered. So make sure you can send me an email so I can keep track of who has participated. Yeah. If you don't have any question, have a good night.
Professor, sorry, I do have a
Yes.
question. This is
Yes, go
Antonia.
ahead. Yeah.
Sorry, I thought I heard another student was mentioning about the My Lab 14 days trial, something like that. But anyway, by the way, Professor, I did send you an email because I'm trying to actually get an ebook instead of buying from ULEF because ULEF didn't reply me at all. And I can't afford to wait any longer, so I prefer the ebook. So getting the ebook online is not a problem, but it's the My Lab that's an issue. So I actually forwarded you an email. I'll wait for you to actually have a look. I did a screenshot for you that because it actually said that it requires your instructor's course ID.
So I didn't. Yeah. Thank you, Antonia. I didn't forget your email. I'm still waiting for the response from the publisher.
Okay.
I did forward a request to ask information about your scenario from the publisher, but I haven't heard back from them. This probably, you know, in the regular semesters, they are pretty good with responding to my emails. But I don't know why, maybe it's COVID, like everything backlogged because all schools started, they have a lot of things to deal with. The publishers are very busy, I don't know. But yeah, I will keep you posted. I will touch with you tomorrow. If I haven't heard anything tomorrow, I will touch base with you to see what we can do with that.
Thank you so much, Professor.
Yeah, no problem.
Because I definitely won't get the ebook because I need to study in advance. The only problem is I'm just worried about my lab. I hope I won't be late for any assignment.
Well, I understand that you are in this situation. I will approve for extension on a case-by-case scenario. So if if your my lab is late, you know, you have proof on that, I will extend your deadline.
Mm-hmm.
Yeah.
Okay, sure. But I think there should be another way to get the My Lab. I'm just wondering, the student was mentioning about trial. If I can get access to that trial, I don't mind paying via that trial. Even more straightforward, don't you think?
So I think it was about having the My Lab. You have a trial of the ebook. That's how I understand.
No problem. Where can I get the link? I just need to get in because I've.
If you go on the Moodle under the announcements, he has a My Lab registration PDF thing open.
Okay.
And if you go in there, it has all of the steps on how to register under a student, and you could get the free trial there, and like the course ID is under there too. And if you just want to buy the code, like say you already ordered your ebook, you could buy the code separate, I believe, as well through there for the MyLab.
Under the announcement, hold on, because I did.
I can show you.
I did go through that again and again. Sorry, Sydney, but thanks for telling me.
No problem. So the class is finished. If you want to stay, feel free to stay. Okay, but I don't want force you to stay with me. Okay, the class is over, but feel free to stay. Okay, it's your choice. So let's see here. So this is the course website. So let me see. Okay, so did you see the Pearson MyLab registration here? Oh, sorry, I'm not sharing the screen. I'm sorry.
No, I'm still looking at it. I can see.
You still look? Okay.
I can see.
So did you see the Pearson MyLab registration?
Yes.
So you just click this document. So this provide a clear instruction guidance in terms of how you're gonna register.
My bad. I apologize for that. I didn't go through.
Yeah, I put a lot of things on the website. So if you make sure you use the course website, I'm gonna continue post the new information there. Yeah.
It means I can solve the problem now because I can see the instructor's course ID here.
Yes,
so I just need to key in this one. You know what? And I'm done.
Okay, awesome.
I'm just need the course ID. That's it.
I'm sorry. Yeah. I probably didn't really understand the situation.
No, it's my bad. I'm so sorry. Thank you, Sydney, if you're still here.
Thanks, Sydney.
Yeah, thank you, Sydney. All right, thanks, Professor. Sorry for the trouble.
Yeah, no problem. Yeah, have a good night.
Bye-bye.
Thank you.
Thanks, Sydney. Bye.
Hi, sir. I just have a question that came up. Just wanted to ask you.
Yeah. Yes, Tim. Yeah.
You know about the example about the 2008 financial crisis. You said how the moral hazard was between the buyers of the house and now it's the insurance company, right?
The consequence. I'm talking about the consequence was transferred from the bank through the packaging of the mortgage-backed security to the investor, and then investor transferred the risk to the insurance company.
Oh, okay.
Yeah. So ultimately, the insurance company is taking on the risk, right?
Yes.
Yeah.
Okay. So to mitigate that, then they would. That's why they're strengthening all the mortgage applicants now, right? Is that kind of how they're trying to control this?
Yeah. So basically, I think for the insurance company, if they want to solve this problem, the insurance company should do something about it, right?
Right.
Yeah. But they probably care less because the government eventually bail them out.
Yeah, that's true. I remember
AIG, right? AIG or whatever.
AIG, yeah. I think remember they dropped to like $2 a share or something.
Yeah.
Okay. Yeah. All right. Thank you so much.
No problem. Yeah.
Okay. Have a good night. Yes.
You too. Yeah.
Thank you so much.
Yeah. You're welcome.
Thank you, Professor.
You're welcome. Have a good night.
Good night, Prof.
Yeah, good night.
Thank you.
Hey, Tim, do you have any other questions? If not, I'm going to end the meeting.